Hey guys, Patrick here from the Chart Report. Today we're going to be having a conversation with the legendary Herb Greenberg. Now, you've probably seen his work before on CNBC or maybe TheStreet.com, but if you're not familiar with Herb, Herb is a journalist and a forensic accountant who's exposed numerous high-profile frauds over the years, including Valeant Pharmaceuticals, MediaVision, MBIA, and many more. Now, he looks at the markets in a totally different way than we do here at the Chart Report, but it was still a great conversation. I learned a ton, and I hope you will too. Enjoy. All right, so I wanted to start off with a quick story about how I met you, Herb. I don't know if you even remember this. This was 10 years ago out in Coronado at a Stocktoberfest event put on by our friends at StockTwits and Howard Lindzon. But anyway, you had given a presentation and I was probably in my mid-20s and went up to you after with my flimsy little business card that I probably printed out at Staples the night before. And I introduced myself and just said, hey, my name's Patrick Benawilla, huge fan of your work. And I'll never forget, you looked me dead in the eyes and you said, nice to meet you. And, I was just amazed that, sometimes the biggest people in our industry are oftentimes the most friendly and kind of generous. And then, sure enough, a few days later, when I got back to New York, I had an email in my inbox from you, just a brief email saying nice to meet you, but it meant the world. And I haven't talked to you since, but here we are doing this, and I'm thrilled to get to know you a little more and introduce you to our audience.
Well, that's great. Can I let you in on a little secret? And the little secret is,
Yeah.
since you were the only person to come up to me and say hi, I was thrilled. So, no, I've always, look, I view the world, and I've always viewed the world from the perspective that you never know, who you meet, who is going to, be somebody who will be, in my case, when I was a journalist, a source of ideas when I was doing research, somebody who you interact with that may become someone who you're friendly with. You never know how that's going to go. And you just want to be treated the way you would treat somebody else if you walked up to them and you might have been somebody you've either known or not known, or you saw a presentation and you just liked it, or even if you didn't like it. So yeah, I think that's just the golden rule of the way the world at least used to work. I don't know if it still does, but it used to work not that long ago.
Yeah, we'll blame it on COVID, right?
Blame it on COVID. Sure.
Yeah. So let's start off with just kind of overview. How did you first get the market bug? What kind of interests you in the stock market? And where did it kind of all start?
Well, it was all through the back door. None of this is something that I came pre-planned with. It was nothing I knew anything about. It was just something that evolved as a guy who, grew up in a small community in Miami and wanted to be a journalist, and ended up being a journalist. And through the back door, in one of my first jobs, it was to become a business. I became a de facto a business journalist, because this is back in the early 1970s when Watergate was a big thing and everybody wanted to be a political reporter. And I was working for a small newspaper in Boca Raton. And those days, the business section, well, this was a 6-day-a-week paper. So the Sunday paper bridged Saturday and Sunday. And
Okay.
the business section was something nobody wanted to have to write the weekly business story. So I raised my hand. They came to me the first week I was there. I did it. I kind of liked it. Didn't realize I was going to like it, and ended up just taking that task on, becoming their first quote unquote. If there was a business reporter, I was the guy who was going to go out and interview the people who were coming to the Boca Raton Hotel and Club and places like that from out of town back then, or people who were retired but had been, sort of significant people in their professional lives. I go out and did
Right.
features on them. They were what I call thumb suckers. They were they were easy. They were, I didn't have quite an edge back then. Anyway, so I got into it. And then as I evolved and through my career, I slowly started getting involved as I became a financial reporter at bigger newspapers. I evolved into obviously focusing on events that were significant and that became catalysts, and you start hearing from people, getting sources. And one thing led to another, and here I am.
I like that. And that's kind of a natural kind of route. Like I always say there's a lot of similarities between journalists and traders. I mean, both are trying to get to the truth, right? You know, both are seeking the truth, whichever way they get there, whether it's technicals, fundamentals. And so what was kind of like your big first story, your big first I don't know if it was a fraud or kind of was there a big breakthrough kind of thing?
There really the breakthroughs occurred, if you wanted to call it breakthroughs, when I was in San Francisco, where I had worked for an arbitrage firm in the heyday of M&A back in the mid 1980s, and literally I was there when the market crashed, the '87 crash, and I made a decision at that point because I had been approached by a friend at the San Francisco Chronicle, where they were starting a column, and he had approached me a few months before the crash and asked if I was interested in returning to journalism. And especially with my background now, I'd been a journalist, I'd been a New York financial correspondent for the Chicago Tribune. I'd done all sorts of things. I was in Chicago for the Chicago Tribune, covering almost in my career, almost every industry you could think of because I was in St. Paul. I have covered every single industry. So he thought, hey, this would be a
Dang,
good
it
guy.
sounds like you've lived all over too.
I have, and that's very important because it gives you perspective on different cultures of different parts of this country, and
Yeah.
and so I think that really helps. That's all part of the package. So they invited me. So they wondered if I was interested in doing this column, and I said no originally. And then the night of the crash, I saw everyone I saw the stunned faces in Nassau Street and other places downtown in New York. And I thought, man, there are going to be a lot of people more qualified than I am to have the job I had that I really didn't enjoy, that were going to be looking for jobs. And I called my friend in San Francisco up, said, hey, is this job open? They pulled me out there. I started doing some M&A takeovers, scuttlebutt, that kind of thing. But there
Yeah.
were some people out there who were short sellers who, the Feshbach brothers were the names. They were very famous back in those days. And I just said, hey, we got to meet. And I called them and just realized, everybody's writing about what's going to go up. And this was a period when San Francisco, if you think about it, it's the late 1980s, early 1990s. It's a cusp of a period when growth stocks were about to have their biggest boom as a result of the evolution of the internet and .com and that whole period, and the investment banking firms that were bankrolling many of these companies, taking them public, were right there in San Francisco. Sand Hill Road was down the road. The venture capital, center of everywhere was, just down
Right.
in just in Menlo Park, which isn't far away. So I was in the middle of this, and then I realized, there's a lot of puffery out there. And as I started writing things, I'd hear from this person or that person who would suggest, hey, you might want to look at this. And so I just got into the habit of writing something. I was in the front of the business section 6 days a week, and I got in the habit of just pulling nuggets of things that were interesting and learning financial documents and things like really learning about the filings. And by the way, this is before the internet and then the transition to the internet, before there was Edgar, things that I would look
Yeah,
at. And so I
so
started
how did
doing
you
it.
get the filings?
Well, in those days, in the old days, you'd call up somebody. Well, there was something called federal filings in Washington. I think at the end, we
Okay.
might have had an account with them to have them send us overnight, send us packages. I'd have friends. I'd say, hey, can you send me a copy of that report? In the years even before that, when I was in, you call it broker or something, when I was back in my even earlier days, but you needed to get the information. But once Edgar came, that really changed everything for better and for worse. And look, I just evolved and I started getting involved in some companies. There was one fraud in particular back in those days that I did that ended up sending a CEO and a CFO to prison. And it was, so you build a reputation on that, and then you just start becoming someone people enjoy reading, because my style tends to be, not so serious. I'll poke fun at myself, and I use senses of irony in the way I write and some humor. I try to make these things very user friendly so they'll appeal to the most sophisticated, say, hedge fund investor, and also somebody who just is interested in the markets and wants to learn, because the big
Right.
concept, the undertone of all of this is risk. Is that, hey, guys, there's risk out there in the markets. And early on in my career, even in San Francisco, I would interview tons of the greatest money managers out there. I would do those interviews where I'd say, hey, this is who they are, and These are the stocks they loved. And I do that throughout even in the earlier parts of my career. So you have the perspective from the long bias guys who were very smart, who would talk about the stocks they owned and their philosophies and how they did it. And then moving in this world and sort of understanding the short sellers and the way they thought, and the fact that they had to probably be a little smarter than everybody else and do more work because they were betting against the crowd, and then learning about the flaws in their systems and who's good and who's not good. And the more you talk to people, the more people come to you, and it evolves. So there are a lot of companies I've written about over the years. There's no one in particular. There's just one after the other. And I've gotten many right. I've gotten a few wrong, but you just keep at it and you keep at it and you keep evolving and you keep learning. Even at this stage of life, I continue to learn and continue to rethink what I do and the way I do it.
So, I mean, you kind of answered my next question. I was going to ask you about your greatest hits. I know you were involved with Valeant and Herbalife. Is
Yeah.
that correct?
Well, and
Um,
you could look at those. You could look at those too very interestingly. So Valiant, I wrote about
sure.
very, very early on. And my story, I think the headline was, "Will Valiant overdose?" I was at street.com back in those days. Will Valiant overdose on acquisitions?
Right, and
And
that's the thing, that right? They were growing by acquisition
they're
and
but not just as a roll up. They were buying. It was the way what they were buying up, how they were buying things up, and
and
um,
and this
and
took like several years, right? Like this was
took
a slow,
years.
drawn out,
I
right?
was drawing attention to something early on, which is often the case. I have a thing. I don't mind being the first guy in. Let other people take it. I'm trying to say, hey, there's something to this company you need to pay attention to. It may or may not bear out. And especially, by the way, with growth companies or companies that have good Wall Street backing, you have to be careful because they can be a false negative that somebody points out to you, and the company can transcend that. So there's no right or wrong in a lot of this. There are certain things you can see to see that this is going to be a problematic company based on problematic management. There were already accounting issues at Valiant. My source on that was Jim Chanos, the short seller, who I had seen talk about a new idea on CNBC, and he didn't give the name. And so I called him and I said, "Boy, what is that?" And he just sort of in passing mentioned Valiant. So I took it and was able to evolve the story. Herbalife is a very different one. I did that back in about 2012. It's a very controversial company. I did a lot of work on it when I was at CNBC full time. We did a mini documentary on it that's online or was online. I don't know if it's still there.
Yeah, I remember that.
And it was a real tough one because a lot of the people who were long that stock, because it became a corner stock, because Carl Icahn ended up having a fight with Bill Ackman. Bill Ackman was short the stock. Carl Icahn was long the stock. I was working on this before any of that sort of evolved because I'd heard about it from one of my friends, and I started doing work on it. It was so fascinating, and we ended up, several of us really went out to the field and we were interviewing former distributors, people who'd lost a lot of money, and then Ackman and Icahn got into their fight, and people that didn't like Ackman went long the stock. It was the craziest situation in the
Right,
world. The stock went straight
right.
up. But if you look at it today, the stock has been clobbered. It clearly was a questionable MLM, a multi-level marketing company. The Federal Trade Commission did cite them, did force them to change the way they did business to some extent, which I think you can see. And also, you end up with just the entire value add of that industry, given where we are in the world, having been sort of shunted aside or shifted aside. I had also done some work early on Tupperware, which was a very different type of
Huh.
multi-level marketing company. I actually called that one out when I had a short research, sir. I co-founded a short research firm that I had for I was there for about 6 or 7 years until I decided just to do something else. And Tupperware was one of our early names, and I continued to follow it once I went to writing on my own because it continued to go down. And what's interesting is that would be considered the good MLM, multi-level marketer. Herbalife would be considered the bad one. And I have to be careful here, by the way. Even
Well, I
though the
was going to
stock
say
has
real
been,
quick, not all MLMs are frauds per se, right?
it's not that they're frauds. It's a business model that easily can prey on certain people who are taken by the opportunity. And some of them, you can look around and there are some that have been around forever, whether it's Amway or whatever. and they've somehow skirted that, and it's not been as big of an issue. But many others became very aggressive, and I think if you're a public company, especially, you have a stock, and people will come and say, "Hey, look at the cash flow of this company." But the question is how sustainable is it, and is there an issue? I think a lot of MLMs have actually unwound or come close to unwinding or had serious problems, especially in recent years. And a lot of people, given the rise of, I'm not going to say rise of social media, but a lot of people with their own TikToks and other things have come out to actually, after they've lost money, become like, there's this whole world of cult of people now who are anti-MLM that are much more vocal than they were, say, even in 2010, 2011. So I would say that's a dicier business model. But there are people who were big investors in Herbalife back in the day, who are still big investors in Herbalife. And I don't talk, they have their reasons, and that's okay. That's okay. You never know where these things are going to go.
Yeah. And I think people probably get the two confused, the Valiant and the Herbalife, because Bill Ackman was involved on the long side on both, right? And they kind
Yeah.
of happened around the same time period, maybe 2011 to
It
2015.
was actually, no, it was a little Valiant. When Bill got involved in Valiant, I knew Bill and I know people pretty well. And I remember saying to one of his right-hand guys, Valiant? I mean, I was like, Valiant? You own Valiant? And it was like, it made no sense to me because they seemed to be missing some very serious components to the story. And ultimately, obviously, it wasn't a good pick for him. And, that's the nature of the beast. Not everybody gets it right, even, and there are
Yeah.
reasons for that. People believe
Yeah.
themselves.
And to his credit, he's survived through both of those and maybe even thrived, right?
I would say Bill has survived and thrived and, has done things his way. And again, he's a smart guy. I've known him. I haven't spoken to him in a number of years, but I can tell you that funny story. When I was I got a story. There was a company called MBIA, and MBIA was a company that guaranteed debt, public debt. It was a guarantor of debt,
Mortgages.
and it was a very controversial company. And I was working at the Street.com in the day, and I was their principal columnist. I was, again, back in the early days. And I'll never forget one of our board members, a guy named Marty Peretz, who was a Harvard professor, I think. He came up to me, and he was a good friend of Bill's. Bill managed some of his money, and he said, listen, I need you to talk. Wasn't demanding I do. He says, I think you should talk to this guy named Bill Ackman. He said, Bill is the single smartest student I ever had. And I said, okay. And I
This
have
was
to tell you,
before Pershing Square, or
this was Pershing Square actually existed at that point. He had been with Gotham Partners. I'd written which by the way, Gotham, his prior firm, was long Prepaid Legal, which was an MLM. I had written negative things about Prepaid Legal back in the day, so it clashed with them there. But that was back then. With this one, with MBIA, what was fascinating, it was one of those companies no one really cared. When I say no one cared about, it's not a headline name, right? But Bill saw
right?
real issues there. And through two jobs of mine, through being at the Street.com and being at, I think, MarketWatch, I ended up taking this story and just evolving it over the years, because it was a story that took years to evolve. I actually used to write for Fortune magazine also. I did some of this at the same time. And remember having a piece on MBIA. And I called Bill. I was doing a piece for them on MBIA, and I called Bill, and this was really impressive. I called him. It was nighttime. I'm working on the piece. I said, I got a question. Something I just didn't understand. He goes, like, without even thinking, he goes, turn to page 82, footnote 4, and there's your answer. And it's like, how would he know exactly where that answer was? But what he got wrong about MBI, he was right about the general thesis that there were serious issues here. The one thing he got wrong was, and it was a piece when we were going to write it for Fortune, and I think we may have pulled it at that point. I'm not sure where that went. I'd have to go back. But he thought that MBIA could actually be the beginning of a pull down of the entire system, because it was that important of an underpinning company that wasn't paid attention to. And for Fortune, I couldn't prove that thesis. So we had to pull back on that. But I wrote about it over the years until it finally did fall apart, as did a reporter who wrote a book on it, who worked at Bloomberg. So it was really quite a situation. But yes, he's a smart guy, whether you like him or don't like him, whatever. And I haven't talked to him in years. He gets things wrong, gets things right, moves on, has been able to recreate himself. So good for him.
Yeah. Well, listen, I want to ask you about some of those specific red flags that you look for.
Hmm.
Obviously, probably everyone is different in its own unique way. But what are some of those telltale red flags that kind of perk your ears up and get you interested in looking at a specific company?
Well, Patrick, it's kind of interesting because in the older days, I would write pieces about what are those red flags, and in those days, it was what were the accounting shorts and things like that that don't really matter. Those are now used to be years ago. People could say, "Hey, Herb, look at this accounting issue," and I'd look at it and go, "Wow, that's interesting." To write it up, and it was actually turned out to be a big thing. Today, those are telltale signs. They're like parts of the mosaic, right? Putting a piece in a mosaic, and they can be an early indicator of a problem among the many. But what I've come to realize over the years is I don't have a process of saying, oh, this is what I look for and this is what I'm trying to do. When I started my red flag alerts formally in May of 2023, I started out with some quant screens I got from some friends of mine who run a quantamental firm called Kailash Concepts. And I would look at their monthly screens and I would sort of see what company is on three of their screens. And then I could create, that's my master list. I have a few and I just write up the things that they pointed out. They weren't even pointing them out. It's just the reasons they were on that list. And by the way, my first few red flag alerts, the names came from that, and they were great names. Now it's harder. The markets have moved in different directions, and that's harder. But since I evolved that, my network has sort of sprung back to life, my network of contacts. Now, what is Wall Street? Wall Street is talking to a lot of people. It's getting information from people. It's keeping yourself connected because like I said, when I met you, you don't know where your next idea is going to come from. I always say the way I've operated for most of my career, and that's I've been doing this column. So I've been doing a column since 1988. And
Wow.
and I've been in this business since 1974. And I've done a variety of things since then. But since I had that column, everything I've done, I always view as the way I think of it in my head. It's planes on a runway. I'm working on a bunch of different ideas. And suddenly someone says, hey, have you looked at that? It's a better idea, one that resonates with me. The others go into penalty boxes. Sometimes they stay there, and I wish they hadn't stayed there because they're the ones I should have written about. But I'm always kind of maneuvering things because it takes me time to do the level of research I do. I don't do as deep a research as I did when I was at a short bias research firm, when I was writing only for institutions, but I still take pride in what I do. So what I'm looking for is something that grabs my attention. Some companies you put in the too hard pile. They might be really good, but I don't have that kind of time, nor do I have that kind of interest to maybe dig into some software company that does things I still can't even explain what they do. So you're looking for things, and I'm also looking for something where there's a story, where I can bring a story out. It resonates in my head. I've been doing this long enough to say, hey, this is a good thing. And I can write about it, and I know I'm going to add value. And then there's the issue is, and over the years, one thing I've really tried to hone down into is the concept of, is this bearish story, this red flag story, wrong? And that's something you always have to ask yourself. But companies can be acquired. That's something that can happen to any company. Or again, the company can be squeezed if it's a short squeeze situation. And what I'm looking for is I'm looking for companies that are likely to lag the market. I don't consider this a short selling service. Somebody wants to short my names, take options positions against the names. Be my guest. That's life in your world as a technician. My world is what companies are likely to lag the market over whatever period of time you want to put on it. And therein lies the challenge here. And my list has proven that if you were looking for short alpha, it generally has provided short alpha, with a few notable exceptions, certainly with some of these becoming memes. So, there's no one size fits all when you're looking for this. And I kind of say, you know it when you see it, feel it, hear it. There's certain people who you listen to more than others because that, again, it's like the way you would do something and the way everyone around here, people who are listening to this or watching it or follow you or follow JC or follow someone else, there's certain people they'll pay more attention to than others. And it's the same here. And it may just be I see a headline and the headline gets my attention. You just never know where a good idea is going to come from. So what are the red flags? Man, it could be any number of things. It could be something somebody points out, proxy statement. It could be where that CEO or CFO worked, how much transition and turnover there's been at that company. It can be a product, the best are the structural flaws, where something absolutely positively feels structurally broken. So, for example, I recently wrote about Post, the cereal company, and I love these companies no one's paying attention to anymore. So, but what I love is Post. Post is if you look at Post, every time anyone would bet against Post, or even if I've written red flags on it in the past, which I have, the negative of doing that is that the company was run by a guy who's one of the great asset allocators ever, a guy named Bill Stieritz. He's now the chairman, but it still is run, and the company runs itself like a private equity firm. That's the way they say they run themselves. That's on their slides and everything. But all I could think of when I was reading their slides and going through the company's, and looking at the company's performances, this is a business model that appears to have, whose time has passed it by. So it may not resonate with the street the same way it might have a different period of time. It's like conglomerates. There was a period everyone wanted to be a conglomerate, and then suddenly conglomerates weren't working anymore. So, this is where you're basically picking and choosing, and it really comes down to me and what I find interesting, which is why I don't even have a publishing schedule, because I'm pretty prolific and I'll write a lot. But one thing I don't want to do is, when I'm talking about one of my red flags, I prefer not to say, I'm giving you something every Thursday and it's not ready for Thursday, or life got in my way, or something, and I find something that pulls me off the story after spending 2 days on it. So that's the kind of thing that, that's how I run it. That's how I see it. That's how I look for it. It doesn't answer your question, but I think it explains that I think that's the way the world really works. Some people have process. Don't get me wrong. They have, and that's how they screen and they find. And I have screens, and I look at stuff, and I'm creating even screens for my red flag alerts list here, different types of screens. But you just have to know that there's so many different variables.
No, listen, I think that's a fantastic answer. I mean, it sounds like it's very much intuition. I mean, especially given how long I've been on the street for,
It,
it
intuition is
is
the
kind of
most
that thing. And I remember talking to
go
one
on,
of the,
go on.
I remember talking to one of the biggest quants on the street, Aaron Brown. He used to be the head of risk management for AQR. And I remember, and again, this is a quant, right? This should be like the most quant type person ever. He's literally mentioned in the book Quants. But he was telling me, people don't give enough credit to intuition. When I show a computer a picture of a cat and I say, what is this? It has to go through a series of logical processes to determine that it's a cat. But if I showed you a picture of a cat and I said, Herb, what is this? You'd say it's a cat. And I'd say, why? You'd be like, you serious? I mean, it's a cat. You just know, you know it in your gut when you see it. So I'm sure that, and it would be kind of oversimplistic to say that it's just one specific metric on the balance sheet every time. So I'm totally okay with that answer. I think that's a great
Well,
answer.
I think people want to hear these specifics because it really does help them. And some people do have fabulous processes, but I listen to a lot of podcasts with a lot of very serious investors. I love those podcasts, and they're talking about their method. And the number who are willing to say, I don't have a process, so to speak, are many. And that's because I think as they've aged and as they've been around, they know that even the structure of the market has changed, and what may have worked as a primary source of an idea isn't necessarily going to work today. And instinct is perhaps the most important. It's one of the beauties of aging, right? You get perspective, and instincts are honing those instincts, even though you're going to be wrong, by trusting them, is incredibly important, because you have to trust yourself in the end. And I think that a long time ago, I used to speak to these classes. There was a hedge fund manager. His name was John Griffin. He used to run something called Blue Ridge Capital, and he'd give these. He had these courses that he taught at hedge fund courses at Columbia and at no, I think it was no, I think it was Columbia or it was New York. Maybe it was NYU. I don't remember which one it was. And University of Virginia. And he had me come in and give these presentations. And he'd always come down and say, "What's the most important thing you've learned doing your job from a journalist perspective?" And I say, "Trusting your gut." In the end, it's about trusting your gut.
I like that a lot. And, as technicians, we always believe that price moves first and the narrative and fundamentals follow. But ultimately, I think, or ideally, I think you want the fundamentals or the technicals, I'm sorry, should confirm the fundamentals. Um, and so I'm wondering, like, is there any sort of technical inputs you look at? I mean, other than I'm sure when you see like a parabolic rally, I'm sure that, something like that, if a stock
Can't
is
miss
just
that. Can't.
gangbusters, but also like unusual options activity, anything from a price behavior standpoint.
No, because I'm not wired that way. I wish I was paired at times with a technician. I've said this for years, where somehow they were having input into what I'm doing because I think there's value in that. I don't have the ability to do it. I don't, I know that when I come out with an idea, the last thing I'm doing, and this went for when I was doing institutional work as well, I'm not coming out and saying, okay, I'm doing this because there's a catalyst and this is going to happen today. In the institutional world, you're providing a jumping off point for them to get ideas and do further research because they still like
Right.
to be able to get their own information, make up their own minds, and decide whether you're wrong. They're going to go take the opposite side. They're not going to do anything, or they're going to take a position, right? And that can take a long time. But I do know in the real world, people are going to look at things and they're going to overlay, many are going to overlay charts. I consider them hybrid investors. I think there are many more hybrid investors out there than people realize who use technicals and fundamentals and overlay one another. And it goes back to the old days when I was in San Francisco. I learned this because I don't pay attention, but when Bill O'Neill was at the peak and Investors Business Daily was at the very peak, and I'd write about all these
Yeah.
momentum stocks, and I say
I was
how
gonna
silly
say,
the
I mean, their
momentum
whole
is.
universe is potential frauds, or I mean, a lot of the fraud that goes on is those kind of smaller, high-flying momentum names that IBD, that's their bread and butter.
But what they would do with some of his disciples came to me, people who were close to him, and we used to talk every now and then because they were trying to educate me. And one of my takeaways, I never read the book, his main Bible of a book, but one of the things they came away from me explaining was that there's more to it than just the stock going up, and that in his system there are also fundamental not levers, but fundamental indicators that they were watching. So, as earnings momentum starts to slow, as all, whatever it was, there was something else under there that they would hope would get them out before the thing peaked. So they weren't doing it exclusively on the price of the stock. They were actually paying attention to some other indicators. It's stuff better than I would know. But I was actually impressed with that, and I used to ring up these guys every now and then because it was always interesting, especially when we were in one of those peak momentum moments, which we were in a lot of back then, but nowhere near as many as we're in now.
Yeah. Yeah, right. And I want to get to that in a second, but staying on the conversation we're having just for a second, like, are there any companies that you or any stories that you've changed your mind on? It sounds like you raise a lot of red flags and you're okay with them not being all, where there's smoke, there's not always fire kind of thing. But are there any that you started going on a path and saying, oh man, this company is bad news, and then through your research, all of a sudden you kind of changed your mind?
No, because at that point, not there's some that I've just not gone. I'm trying to think. Of course, there's some that I decide not to go with because I'm not comfortable with the
Right.
concept, or I push somebody on it and I'll say, what about this, this, and this? Because in the end, it becomes somewhat of especially as a non-journalist, there's a collaborative effort sometimes where it's more than me in the sense that there are other people I'm talking to and I'm trying to get information and I'm trying to challenge them on their theses, and they're coming back to me providing more information because a lot of these guys find if they're talking to me that I'm challenging them, and by challenging them, it's making them rethink what they're doing. There are names that I have on my red flag list. So I have a red flag list. It's probably about 37 names now.
Okay.
They're not all red flag. What they are a rolling list because I figured for transparency purposes, let's just put them out there. Just keep it going. Most of those, because what's also interesting, and I haven't done a tally in past 2 weeks or 3 weeks, but most of those, even in the aggregate, even with those that have gone up 150%, most the aggregate list is still negative. So and that's a point in time, right? Because we don't know where some of these memes are going to go. So, and some may stand the test of time. But I think there's some on here that I've written up that could be longs. I've come back and said, hey, this is, this could be longs because many shorts do become longs. The worst is squeezed out of it in terms of the company turns itself around, or as the case with some, which happened to me with one or two already, the same screens that attract a short seller might attract an activist long. And as a result of that, you end up with sometimes a smart activist coming in. There's a company I wrote about a while back, Yeti, Y-E-T-I. Let's see, the stock was, I don't have the screen in front of me, but the stock was $38 when I wrote about it. And then I don't know, where is Yeti now? And what happened with
Oh yeah.
Yeti was Yeti showed, if you put up charts with Yeti, let's see where Yeti is, 38. Okay, so the stock's
Yeah.
finally going up, but everything's gone up. So, but if you
Yeah.
put up when I first wrote about it, it went down to 33 or so. But so it's back to where it was. It's flat. But what's interesting is about 2 or 3 weeks after I wrote about it, and it was one of the most fun things to write because every single number. I mean, you go through. I love showing the charts of the just every picture tells a thousand
Oh
words,
yeah.
speaks 1,000 words. And I love telling those with some of the fundamentals I get, and you go through it, and it was just unbelievably right there in front of you. And then about 3 weeks later, Relational Partners, which is out in Southern California and does a pretty good job with activism in a quieter way, came in and took a long position, and it was a very interesting situation. Well, they're there for a reason. So I basically said, hey, Relational's there, and what am I going to do? So I just pointed out, we'll see what happens. So those are
And
the kind of things. Or Vail has an interesting activist in it. MTN, Vail Resorts has a
oh
very
yeah.
interesting activist. Yeah. And so I pointed some of those out as possible long.
No, and even like in a case of Yeti, are you always betting on a zero, or you're just like you mentioned it before,
Hmm.
you're looking for
No.
stocks to underperform and lag the market, right?
Remember, let me make something clear. I'm not short these stocks.
Yeah.
Right?
Yeah.
I've never shorted stock in my life. Not that if I was around somebody who can say, yeah, whatever, I should, because there's certain ones that are just screaming from the
You
mountaintop,
never shorted
but
a stock? Not even one?
not even one.
Oh
So
wow.
whenever anyone comes out on social media and says, Herb's short this stock, Herb's blah, blah. Hey, dudes,
Yeah.
ever since I became a stocks journalist, I withheld from owning individual stocks because for the very reason that everyone thinks you're conflicted. Today, I can own or short stocks. I just have to disclose it as a non-journalist.
Yeah.
And I, every now and then I do own something that I write about, and I point it out. But in terms of uh, most of these I'm looking for are companies where there's an issue, not thinking they're not frauds, they're not scams, they're just companies that are structurally challenged, or they're going to be there are going to be issues with the company. There are going to be competitive issues that seem to be showing themselves that may or may not bear themselves out. One I wrote about, which is up quite a bit since I wrote about it, is Vital Farms. Now it's been all over the place. It's an egg
Oh,
company. They've done a fantastic job
yeah.
branding themselves. But the question is there's a tremendous amount of competition coming in. They're farmers. They have a challenge with their farmers where they are once the key person out, the key source of pasture raised eggs. They have competition from other companies that are giving better deals to the farmers. You can go through this a million different ways, and other
Yeah.
people are coming into the dairy case with colorful packaging as well. But they have their diehard users, even though they're extraordinarily expensive. So you don't know where some of these are going to go. You're just looking for interesting issues, and in the end, let me tell you something. This is the way I view a great investor. I'm not talking about a technical investor like you are. I'm talking about a fundamental investor. I've had some of the best as my clients or subscribers when I'm doing institutional, people paying 40, 50,000, $60,000 a year. We put out a report on a company and somebody comes and said, you're wrong. We own this stock and we want to own more, but you made us underwrite the stock, re-underwrite the stock. And you know what? We sold our position. Thank you very much. You helped us because the stock ended up going down. We've had other situations. Someone says, hey, dudes, we love you guys, but we did a re-underwrite our position because of what you wrote. They come to us, they ask us very specific questions. They say, you're wrong. And in that case, that one case I'm thinking of, they were right. And they stayed in there. Because remember, sometimes these companies, it's very interesting. The investors I love the most are those who are true compounders and can be in something for a long time. And there's a company that I wrote up when I was doing long biased newsletter a few years ago. And I wrote up a company called Brown.
That's more long investors, right? Or is that
yeah, more no, totally long investors. Well, shorts can't really be true. There are shorts who will fight the battle and be there till the bitter end. And if it's their own money,
right,
they can handle that, right? Because they don't have a portfolio manager, they don't have to risk money going out the door other than their own personal money going out the door. And there are people I know who short and fight the battles and will take positions right when you would think no one would take a position at the very top, and then they'll write it down. They do their own research. On the long side, though, there's a company I really loved. I wish I could own it. I should come back and look at it, but it's gone way up since I first wrote about it. It was called Brown and Brown. It's an insurance brokerage company. And there are a number of people who've owned that stock for a very long period of time. It's a family-run business, basically, the family component, which is some people would say is good or bad. Its governance is pretty good. The company, though, has had huge drawdowns at times. So anyone long that stock has to basically stay there. And I'll never forget when I was writing about it, they had a pretty big disappointing quarter. Stock fell out of bed. CEO said, hey, I don't care what anyone does with our stock because we know where we are and we know where we're going. And man, that stock ultimately quarters later went up. And one of the guys who loves the stock is a guy named Chris Mayer. And Chris wrote the book 100 Baggers. It's a fantastic book about if you were interested in buying longs. And Chris is this low-key guy. He manages a family office for Bill Bonner, who started Agora Research and that whole world. And Bill used to write a newsletter, Chris used to write a newsletter there, but couldn't fit quite into that system. But so he now manages Bill Bonner's money, this private office. But I love listening to. Pardon?
That's quite a lot from what I hear.
Well, yeah. So I like listening to Chris's podcasts because sometimes he says things that are just resonate with me. And when he doesn't have a podcast, but he's a podcast guest. And what he'll say is, he'll talk about that, and not just him, other people like him, I've heard say the same thing, is on one hand, it's excruciating pain, but knowing the company so well, you are willing to live through periods where stock will lose 50%. And you're not going to, whether they buy shares below that low, I don't know, but they literally stay there with it because they believe the business. But they're also paying attention every quarter and making sure things haven't changed, because sometimes things do change. So it's keeping an open mind to both sides. So the best investors tend to want to know both sides. Now, that's very different from what you do. And it's very different from what, say, J.C. Peretz does, right? What the company does. I just know stocks here, stocks going here. That's another way of investing. So but I think these hybrids, I'm convinced there's so many hybrids out there who are looking for both sides of it, and then they game it. So another example, don't mean to monopolize the conversation here, but I will. Another example
this is great. Yeah.
Is that when Jim Cramer, I used to work at TheStreet.com and I know Jim. And Jim, I used to always think this about Jim, because people forget Jim had a stable of analysts working for him in his hedge fund. But he also was a big believer in technicals.
And he too started in the journalism.
Yeah, he was
just like
he had to a point, but he was a lawyer as well. So he goes way back as a journalist for a very short period of time, and then he went to Harvard Law and he became a lawyer. But well, I don't think he became a lawyer, but he went into investing. But what's interesting is that I always believed that he, like others who are hybrids, they use the technicals to direct them either in and or out of a position, but they game the odds knowing what their analysts or what their fundamental research says to know whether this is one they want to get involved with, whether there's something that's changed that they want to get out of. So I think that's an interesting part of it. And that gives them a little different perspective than say the pure technician.
Yeah. Well, listen, I know you have you got to keep some stuff under wraps here, but are there any specific ideas or companies that you can talk about now that have your eyes, or within the last year, anything that's really stood out to you?
I mean, I'm working on some interesting stuff now that would seem to be so boring. I'm writing a report right now. I don't know when this is going to air, but I'm writing something that'll be out in a few days. No, I mean, I look at the ones that went up. You know, you look at those, the ones that became memes that you didn't know were going to become memes. And I recently wrote about why you need to avoid these kind of companies if you're going to write red flags right now. The ones that I look at, I'm currently working on the solar. I have a friend who's been short these solar stocks forever and has been very good on them. And we were just talking this morning. And I've Enphase and SolarEdge in particular, I wrote about originally when they were in well over, SolarEdge was 164 when I first wrote about it. Enphase was 128. SolarEdge today, I don't know where it is, but it's not 164. It's Sedge is, and it's probably heading. It was squeezed recently in the weirdest squeeze of all. It's
You know,
27.
you mentioned these meme stocks. I mean, have you ever seen anything in your career that comes even close to that? I mean,
Yeah.
maybe .com mania, but
No, there.
I mean,
Yeah.
it
Throughout the
really is the
career,
case where it seems like
these
investors don't care about
these
the
used to
fundamentals
be.
there.
Let me explain. These used to be called concept stocks back in the day. There have always been concept stocks. There have always been short squeezes. Back in my day, I used to have fun writing about a company called iOmega back in the early days. They made zip drives, the first zip drives, and they were going crazy about them. We used to call the people who loved the stock iOmegans. People were sick of me writing about iOmega every day. I was writing about iOmega in the business
Oh
section,
man, they had their
and
own name.
yeah, and eventually, well, let me tell you, I was just reminded of this yesterday. Iridium is somebody who's making an interesting comment on social media about Iridium and how there's um, what's happened to Iridium, which is theoretically would be a satellite communication company, but Elon Musk sort of has shown how that should be done. But in any event, um, the I used to call those guys, they were called the Iridians because those people would come after me. These people, I used to have something I called the hostile reactometer. This is sort of the hostile reactometer back here. And the hostile reactometer would start spinning out of control when I'd write something. I knew I was onto something. The faster that thing would spin, because you had that
Yeah,
all along. The difference today is social media. And the difference from pre 2008, post 2008, and that's not the great financial crisis, but the real turning point of when I joined Twitter and back in the day, and when Twitter became big, was social media has accelerated, exaggerated, allowed people to have their own voice and say things and come out and just be louder and nastier than ever. It used to just be on stock message boards, which were bad enough. But whether it was the Yahoo boards or the AOL boards or wherever they were in the past. And now, you have social media, which adds a whole different dimension to the entire situation. So I think that so you've seen it, just not at this level, and also with not this level, this velocity of move so rapidly, um, and uh, and so many. It's just so many. There used to be a few here and there, but now it's like, you know, so you have to be a little more careful because of, again, the structure of the markets, things people will typically say to you, whether it's about pod shops or algos or you name your excuse or your reason for the changes, but there clearly are changes. And Robinhood and the retail crowd and the way the retail crowd thinks, and South Koreans that have played a big role in this market that a lot of people don't even pay attention to. There's so many different variables out there, that I think I'm never going to say it's different this time, but it certainly made it there are changes. Things have certainly changed. You have to be aware of those. And I rethink what I do every single day. Really, I never sit here, even if stocks are going down, I always go, okay, good. Now what? Because there's a certain point where I can see if they go so far low, this thing's going to turn around. It's been that way for as long as I've been doing this. I used to say, if people said I was smart, when people started hanging on my every last word, we knew the market had bottomed. Always is the case.
I don't know
People are
about
always
that.
looking at red. People are always no, I'm serious. People are always looking at red flags at the wrong time.
Yeah.
And that's one thing that has not changed, and it will not change.
And when, I mean, is the opposite true? Like when well, I guess like in good times they ignore the frauds and they're more in tune to it. Like in bear markets, is that
In bear
kind
market,
of it or no?
no one's going to point fingers other than people who are looking at promoters. No one's going to, or some recent Chinese stock scams. No one's going to point fingers when stocks are going up. But when stocks fall, suddenly fall in an elevator shaft. Yeah, express elevator up. Some people say the escalator up, elevator shaft down. Express elevator down. I say elevator shaft down. Um, when
Sometimes it's
when
both elevator up, elevator down.
yeah, it can be in the same day. So the thing is, no one ever points fingers. But they do point fingers when things are starting to fall. And a lot of people, especially newbies in the market, don't understand that the market is the great humbler. And the one thing you can never do is have so much humor. I always say, hubris can be humbling, and a lot of people don't understand, especially if they've been in this market, they're younger, they've made a lot of money fast, they think they've figured out the secret sauce, and they're the ones who end up holding the bag. It happened in 2021. We saw even the smart people left holding bags in 2021. We're going to see it again in this cycle. And that's why it pays, whether you're using technicals or you're using fundamentals, to have some level of discipline. So at least you know that there's another side to this. And, not to get so punch drunk and happy and think that everything's going to $100 from seven. It just, maybe it will. And then will you have been smart enough to trade out of it? Or will you stay? I mean, there's so many variables. We've seen it all. Again, I keep coming back to the beauty of aging. Beauty of aging is, man, I've seen a lot of things. And I know enough to know nobody knows. I know enough to know that every single person is making it up as they go along.
Well, listen, I got two more questions for you. One, biggest lesson you learned throughout your amazing career that you've had, if there was one thing that really stood out.
Don't believe your own bullshit.
Ah, I like that. And maybe question yourself always. That kind of seems like a
Constantly.
theme that you've mentioned a few times.
And many years ago, when I interviewed, this is in the 80s, hate to keep dating myself and going back, but there are periods in time. When I used to cover industries, I used to cover Coca-Cola. And the former president of Coca-Cola, a guy named Don Keogh, they were riding so high in those days. And I remember interviewing him saying, aren't you nervous? How do he says, and he said to me, I'll never forget, big guy, salesman. So he's kind of says, I'm always
This is
looking
the
over my.
CEO of Coke at the time?
No, this was the president. The CEO is a guy
Okay.
named Roberto Goizueta. This was Don Keogh, and he goes, I'm always looking over my shoulder. And I think a lot of people who get punch drunk with stocks, especially if they're less sophisticated or they're just new to the market, because now it's like sports gaming to them, right? So it's the same thing.
Right.
They don't understand that there's another side to this. And this is not like, this is probably easier for many than gambling. It especially has been. And they're probably, many of them will get their heads handed to them.
Yeah. And just I think looking at the market from both sides, I think, when I started shorting and stuff for the first time, that gave me a better insight. It made me a better long trader because it forces you to think and ultimately get to what you're saying, which is question yourself and always challenge your own
Well, I
thesis.
want to I want to tell you two things. One, when I was doing long bias
Yeah.
research, I I think one reason it would take me so long to do something was because I was always worried that I would be embarrassing myself and that I'd get something wrong, and these would be one of the names that one of my short selling friends would come along and find the flaw in the argument. So it always kept me on my toes. And I kept myself on my toes with one of those longs where I knew it was a long that was going to be problematic. And I actually, even though my subscribers, we opened it and closed it in short order, they made money on it. That thing ended up being what my instincts told me it was. So you have situations like that, and situations where anyone who's going into short bias to long, from short to long, will tell you they take longer for that very reason. And sometimes long bias investors say, what are you spending so much time on this for, to someone who comes from the short side of the street? Something interesting. I'm writing a piece. I'm working on a piece that is a green flag. Every now and then I do green flags, and because I actually prefer that, but my DNA for what I do professionally is the red flags. But every now and then something comes along. This one's fascinating because the story that I'm going to tell, and the story that hooked me in, is the guy who told me the story is long the stock, but it's better than that. He runs a long short fund. He is a short bias. He loves shorting promotions. He loves shorting. That's a big part of, he has a lot of shorts. Many of them are promotions and things that he knows are going to be bad. And his firm is the largest investor in this company at half the price it is now. He came in at double that price himself to buy the stock, lots of the stock. He will not sell that stock until his firm sells the stock. And he thinks, he's specifically out there saying that he thinks it's the single best investment idea he's come across. Now, when you look at his presentation, he'll tell you this is the risk. He understands the risks implicitly, because there are risks, and he could be wrong. And he's the first person to tell you that. But when I see that kind of conviction, and by the way, I've seen it before, and I've seen short sellers go long, think they've discovered the best thing in the world, and be horribly wrong. And this one's a little different, I think. I'm going to write it up. I'll let my subscribers determine it. But that to me is something you sometimes look for, and you want to share.
Yeah.
He's on the record, because he's on the record, If he wasn't on the record, I wouldn't.
Yeah, no, I can't wait to hear what that idea is. But listen, this is great. And my last question is just, where can people find more of your work if they're interested?
It is herbgreenberg.com. That is the best place to find me. I am, as we record this, the actual home for it is on Substack, but we're moving over to a different platform where I'll have my own website, and it'll be Herb. The brand is Herb's Red Flags, and it's going to be Herb's Red Flag Alerts as our premium product, and then Herb on the Street, which is my traditional brand. It's my free newsletter that anyone can get, that I continue to write. And all they have to do is sign up, and they'll be on the list, and they'll be on the free list. If they want to get on the paid list, they can pay for it too. The price is about, again, I don't know when this is going to run. The price is either shot up or the price is about to go up, but the price is going up as we do this in about 5 or 6 days. But I think either way, the way I look at it with these things is, if you don't get value out of a newsletter, you can't, make or avoid losing $300 to $500 in the course of a year, then you should not be a subscriber to my newsletter. And there's the intangible value that if you really don't care either way, that you're going to enjoy what you read, and you're going to learn something in the process that will go into your knowledge base as you're trying to learn about investing.
Absolutely. Well, hey, Herb, thank you so much. This was a real treat, and appreciate it. And I hope we can talk soon.
Oh, anytime. I love it.
Awesome.